All right, everybody, welcome to today's live stream. Thanks so much for showing up. And today we're going to be discussing some key rules that apply to pretty much any lending. Okay, so any of you who are working on lending for your real estate deals, who are trying to get like business credit cards, trying to get loans, business lines of credit, this applies to literally any lending. Okay, it's universal. And if you can find any lender that does not require one of these three things, please DM me because that would be awesome. But I bet you can't. So there's three C's that we're going to be focusing on today, and that's going to basically seal the deal when it comes to you going to the banks or going to private or hard money lenders and trying to secure loans or business credit products. Okay, so this live stream will be a few tough pills to swallow for some of you. However, it's the simple truth and it's universal. Okay, so everyone needs to learn this stuff, and these lessons are immensely important literally for everyone. So I'm actually really glad I'm doing this week. This live stream is way overdue. Now, a lot of the times when I'm talking to people who are looking for lending, I'm hearing about all kinds of like hidden like secrets or hacks, things that people can do to basically hack the banks for funding. It all comes down to these three simple C words. Okay, so all this stuff about like non-PG funding and building like a paydex score. Um, that is, there's a time and place for that, but there's other things like these three C words that are going to come in conjunction with that in order for you to get non-PG funding. Okay, so this is really the foundation of funding. Now, if any of you have any ideas as to what these three C words might be, I'm very curious and I would love to see some of your faces. So go ahead and drop in the comments what your ideas are. Okay. Some of them might be obvious, some of them might not be, but I'm really curious just to hear what people are thinking. And while you do that, I'm going to go ahead and set up this short presentation I've put together for everyone. Okay. Nope, that's not what I want. So we're going to do slideshow. Okay, guys. So the three C's of lending. Now let's go on to the first C. And for those of you who guessed it, you guessed right. Credit. Okay. So like I said, there might be some tough pills to swallow in here. I know not everyone watching has a really strong personal credit score, and it's not even really about the score. It's mainly about your credit report as a whole. And you'll hear me say that time and time again, but let's dive right in because this right here is an obvious staple. Okay. So what is credit? Basically, it's just your history of paying back lenders. So, paying back credit cards over a long period of time, paying back auto loans, mortgages, that kind of stuff. Have a lot of open accounts, pay them back repeatedly over a long period of time. Don't miss payments, don't get late payments, don't let bills go to collections. Just keep paying things on time. That is how you get good credit, okay? So basically you see here I said make on-time payments, do a high number of accounts over a long period of time. It's really that simple. Get credit, get loans, use them, pay them off. Rinse and repeat. Now, what kind of lending does good credit get you? So this is going to usually get you by itself lower tier funding products. Okay, things like personal credit cards, business credit cards, maybe some like personal loans and things like that. But usually it's going to be no doc or stated income lending. Now, no doc is short for no documentation. So that means banks are not going to ask for financial documentation in order to approve you for these products, or stated income lending, which basically means that they're not going to be asking for any proof of income, and you can kind of put your stated income or sometimes your estimated or your projected income on an application, and you can just get away with that to get your approvals. And these lenders will really just look at your good credit score and they'll be like, yeah, you're trustworthy. We're going to go ahead and give you the loan. Now, usually this is going to apply to credit cards. Like I said, sometimes loans, like personal loans and things like that. Sometimes lines of credit. Now, I get a lot of people in this Facebook community who ask me about business lines of credit because they're really good for real estate purposes and they're cash products. Generally, business lines of credit are going to require 2 years of minimum business age. They also often do, but not always, require cash flow. Okay, so good credit is often, but not always required in conjunction with cash flow as well. Speaking of cash flow, can anyone guess what our second C word is? Cash flow. um, Now let's define this. Okay, so cash flow is pretty self-explanatory, right? It's the flow of cash in and out of a business's ecosystem. Now, um, normally this is going to be in terms of revenue, like how much is coming into the business is a really important number. Sometimes banks will kind of consider how much is going out, sometimes they won't. It really just depends on the financial institution and the lending product. So you want to ask these questions, but usually cash flow is going to encompass everything from revenue to expenses and then everything in between, which is basically profit or loss, which loss should probably be a word in here as well. And this would be for a business or individual. So how do you showcase good cash flow? Well, one thing that I hear a lot of people talking about is like, hey, I just went to BMO Harris and I opened up a business checking account and I dropped in $100,000 so I could apply for like a $50,000 line of credit, but they denied me. And people are always so confused because they're thinking, well, I just put in all this money into a bank account so they can see that I have money. Why would they not give me a $50,000 loan if I'm showing them I can clearly pay it off? That's because dropping, $100,000 into a bank account doesn't display cash flow, right? BMO Harris in this example, they might not know where that money came from. That could be another loan that you just put into their account. You might just be highly over leveraged for all they know. So what they really want to look at is trends, short-term or long-term trends. And that's why they're going to ask for things like bank statements, tax returns, profit and loss, balance sheets often if you're in like retail or restaurants, these types of financial documents, because it gives the banks and the financial institutions a better idea of the trends of your business. Okay. And it's not always about being wildly profitable. This is another misconception. Banks understand that your loss or your expenses are going to be encompassed in, for example, the loan they give you. The loan is there to take over those expenses. So as long as you have cash coming in that can reasonably pay off that loan, that's really what they're looking at, or that you're reasonably profitable. Profits don't always have to be major, but as long as the banks can see that you can handle your expenses over short and long-term periods, your cash flow is going to be considered good. Okay, so this is what you want. You want to build cash flow over periods of time. Now, what kind of lending does good cash flow get you? Easy. It's going to get you low doc loans and credit products. So credit cards and lines of credit usually is what I'm talking about there. Now, low doc is usually just going to be like 2 or 3 months bank statements, personal, business, bank statements, 2 or 3 months. As long as they see you have cash in there and maybe a little bit of movement is happening, you'll be good to go. Low doc loans are really common with like business lines of credit, and they're very common as well with credit cards at certain banks that do require financial documentation. Full doc loans and credit products. That's going to be the longer term trends. So low doc is the short term trends, like last 2 to 3 months. Longer term trends of cash flow are going to be full doc loans and credit products. That's also going to be, in some cases, credit cards over $50,000. It's going to be business lines of credit at a ton of banks. So a ton of banks require 2 years of business stage and 2 years business tax returns. And a lot of these banks are going to give you maybe 20-25% of your business revenue. So they're looking at your cash flow as a determining factor in how much they want to approve you. And they want to make sure that there's a trend that your business has been operational and cash flow positive for the last 2 years. Okay, so lines of credit, really popular cash flow products. As I said earlier, some banks do not require financial documentation for lines of credit. So get them on the phone, ask them these questions yourself, okay? Typically, if you're looking for 50,000 or more from a single lender, you are going to have to provide financial documentation, usually in the form of tax returns. So this is what Sophia and I are really good at, is we're really good at getting 50K or even under sometimes from all the banks that require 50K or more to have financial documentation. We'll put all those together, and then at banks that do let you go past 50K, we'll try to slam dunk those as well for our clients, right? So once you get like 50K products, you're all of a sudden that'd be 250K in funding. That's how you do it. Okay, you stack it all together. And that's how you get funding without any financial documentation. But you need to know where to go. You need to know what to say to the banks, and you need to know ultimately what they're looking for, okay, and how to provide that to them. Now, some banks will let you go higher than $50,000 without financial documentations. Some of them, actually, most of them stop at 25K. So, for example, Truist Bank. Truist Bank, if you're in a state that is in their footprint, they'll give you up to a $25,000 business credit card without financial documentation, or up to a $50,000 business line of credit without financial documentation. So those two lending products are different: credit card, business line of credit. The line of credit usually requires 2 years minimum business age, but they actually go up to 50K without docs in most cases. Now, keep in mind, an underwriter always has the right to ask for documentation after you apply. So they might not ask it on the front end, but if they need more information, they can always come back around and ask for tax returns after you apply. So just be aware of that when you're applying with Truist or with other banks, okay? Typically, good cash flow is going to get you loans, SBA loans, MCAs, merchant cash advances are really, really popular revenue products because they actually don't require good credit in most cases. They just look at your cash flow, right? And they give you the funding based on that. Business lines of credit, credit cards over a 50K limit. Third C, collateral. What is collateral? An asset that holds its value. Okay. How do you get collateral? Basically, this could be in the form of real estate. That's the really common one. It could be in your car. It could be in a painting or some kind of art. It could be in diamonds or jewelry. Pretty much anything that's a high value item can be potentially used as collateral, as long as it's something that holds its value. And usually high value items do hold their value. Now, you would need to prove how much value your asset holds by getting it appraised by a professional. So you go, you get it appraised. Someone's going to tell you professionally how much this item is worth. Then you take that to the lender, and then the lender will give you a loan based on your collateral. Now, for those of you in real estate, you know that a bank might have a loan to value, right? So basically, let's say, for example, a bank is offering 75% loan to value for a real estate, like a home or a commercial property. Therefore, let's say, for example, you have an $100,000 home and it was appraised for $100,000, and you take that to the bank, they might give you a $75,000 loan against your house as collateral. And collateral basically is just the bank saying, hey, look, if you default on this loan, we really want to secure ourselves in this investment. So we're going to take equity, or we might even take the whole item as collateral, basically kind of holding it like hostage, like there's a lien against it, right? So that's pretty much the way collateral works. This is really only ever going to be necessary for very high tier funding products. That's going to be auto loans, mortgages, SBA loans, large business lines of credit, right? Of maybe multi hundreds of thousands of dollars. This is when people really going to start tightening up and asking for collateral for your approvals. And usually collateral is going to come in conjunction with the other two. So they're not usually just going to give you a loan just purely based on collateral. They might also want to see good credit. They also might want to see some kind of financial documentation. So it really all just depends. At the end of the day, what you need to do is just talk to your lenders and figure out which of these three C's they're looking for. General rules of thumb here. The more in funding you're looking for, the higher up the ladder of these three C's you're going to be working with. Lower tier funding products like credit cards, personal loans, short installment loans, things like that. You just have good credit, take care of your credit, and you're just going to be fine, right? If you're going to go for large business lines of credit or very high limit credit cards over $25,000 or $50,000, depending on the lender, you're going to need cash flow. You're also going to need credit. If you're going to go for like merchant cash advances or sometimes loans, like term loans, sometimes all you need is cash flow. You don't even need good credit, right? Cash flow only products tend to be higher interest. Okay. So for business expenses and just general working capital, a lot of the best funding products in terms of interest rates are reserved for those with strong credit, which is why we're such a credit heavy group here. And I'm always preaching, and so is Sophia, we're always preaching, have strong credit, because, a lot of these banks, like, this is what they're looking for at the end of the day. And they want to see that long-term trend on the personal side. And that's what's going to get you the best results in terms of lending. And then, if you're going for higher tier funding products, you work your way all the way up the ladder, you can expect to start seeing that word collateral come into the requirements of these lending products. So be aware of that. Lower tier lending products, oftentimes they only perform a soft or hard credit check, and you can get up to $50,000, right? So Sophia and I, we really specialize in that. Of course, we can always help with like SBA loans and large business lines of credit as well for those who qualify. But yeah, those lower tier funding products for startup companies, especially that are newer businesses and don't have cash flow, or maybe don't have business assets as collateral, that's really where the money's going to be. Okay. Now, that all being said, if this sounds like you and you fall into one of those first two C's, primarily strong credit, or potentially also have cash flow in conjunction with strong credit, that opens you up to certain lending products. Now, if you want to make the most out of this funding process, let us help you. Okay. At Restora Funding, Sophia and I are literally getting up to $100,000, sometimes more, for members of our Facebook community in less than 30 days. All right. So it's a very quick process. We work directly with high-level bankers at major banks who can help you swing larger limits on your applications. We'll introduce you to them. We'll submit applications on your behalf even. This is a done-for-you service, right? So if you want to make the most of this, go ahead and just type the word funding down below. We'll reach out to you and schedule a call, and we'll talk about next steps. Anyway, for those of you who enjoyed it, let us know in the comments. If you have any questions, let us know in the comments, and hope to see you next week. Thanks so much. Bye.